what we would not like to see is, getting back into any kind of mode of over-regulation, either from a policy perspective or from a taxation perspective. I think if you look at capital markets or businesses, if you combine all the taxes, we might already be at the very high end of countries globally. So when I talk about, corporate taxes, people only talk about 25% tax on, that's a corporate tax level, but you also have marginal tax rate applicable on dividends. So Raamdeo ji, he's an entrepreneur, and when Motilal Oswal makes profits, they pay 25% plus 2%, and when then he receives dividends in his hands, correct me, Raamdeo ji, it'll be somewhere around 40%. So overall, you are approaching close to 60% taxes, on profits that, say, Raamdeo ji's company is making before those profits get to Raamdeo ji's hands. That's probably amongst the highest anywhere in the world. We don't want to see more aggression. I think the markets would not like to see more aggression in that side. If we look at the capital markets trading, a variety of taxes, STT, dividend taxes, share buyback taxes, obviously short-term gains taxes, long-term gains taxes, and some of those probably I'm forgetting right now. So that is a couple of things that we don't want to see more aggression on.
Okay, I mean, that's well summarized, well put. Raamdeo ji, same thing to you? You would echo that?
Yeah, I mean, one is, of course, talking about more taxes, but second is the clarity on the taxation, in the sense that whether it is AIF, whether it is short term. I was talking to my tax advisor, and he was saying that short-term capital gains tax is still not absolutely clear whether you are in or out. I mean, they can, assessing officer can still classify as business income or whatever. So I think that clarity, I mean, these kind of small things, and for the government, it doesn't take much time to clarify, and they just leave it. A lot of authorities, they leave it just like that, but it has a huge implication in terms of ease of doing business or reducing the difficulty of doing business. So I would think that more responsive tax authority and listening to the problem, because the opportunity is very large now. I mean, the markets have become $5 trillion market.
Yeah.
And I'm quite sure what Prashant was saying about the earnings growth and all. And I generally believe that those things are most likely to happen at 7-8% kind of GDP growth rate. That will double the earnings in the next 5 years. So there is no reason why the markets will not go, including the new issuances, to at least $10 trillion, which is it's a mega markets. I mean, Mumbai will be known for the stock market only types, So because the markets are only in Mumbai. So $10 trillion market is a serious market.
Yeah.
In US, you have $50 trillion, but it's spread all over the country.
Yeah.
Unlike here, it's just in South Bombay.
Yeah.
So I think we have, and the whole country's financials are dependent on this. So we should be taking a little more seriously looking at this. We are not asking for any tax concessions as much, but the clarity on the taxation is more important.